Imagine a single waterway, just 21 miles wide at its narrowest point, holding the power to disrupt the entire global economy. This is the Strait of Hormuz. Nestled between Oman and Iran, it serves as the world's most critical oil transit point. Today, we examine the chain reaction of a hypothetical blockade. Under normal conditions, 20% of the world's liquid petroleum passes through here daily. Thousands of tankers form a continuous vital energy bridge across the seas. But when a blockade is announced, that flow hits an invisible wall. Ships stop in their tracks and the global supply chain is severed instantly. News of the closure spreads like wildfire. Digital headlines flicker across the globe, signaling the start of a massive geopolitical and economic shift. The first impact is felt in the commodity markets. Supply and demand balance is thrown into chaos as millions of barrels of oil are trapped. As supply vanishes, prices react violently. On trading screens worldwide, the cost per barrel begins a steep, aggressive climb upward without hesitation. In a stylized workspace, we see the representation of crude oil. Barrels that were once affordable now carry staggering price tags, reflecting market desperation. Traders on the market floor react to the uncertainty. Every minute the strait remains closed adds more premium to the cost of future energy. Speculation fuels the fire. Even oil already in storage becomes more valuable, leading to a worldwide panic over how long the disruption will last. The ripple effect soon leaves the trading floors and hits the streets. The most immediate impact for the average person is found at the pump. As the cost of crude oil rises, refineries must pass those costs down. Retail gasoline prices begin to soar, often within hours of the news. Commuters find their daily budgets stretched thin. But the car at the pump is only the beginning of a much larger logistics crisis. Everything you buy has to be moved. When fuel prices spike, the cost of moving goods by air, sea, and land increases exponentially. Logistics companies implement fuel surcharges. These fees are added to every shipment, from heavy machinery to the small parcel delivered to your doorstep. Beyond transportation, petroleum is a core ingredient in manufacturing. Think of the plastics, synthetics, and chemicals used in millions of everyday products. As the raw material costs rise, so do the prices of finished goods. The blockade has now moved from energy to the general retail sector. Now, the ripple reaches the most fundamental human need: food. Modern agriculture is deeply dependent on fossil fuels to function efficiently. Tractors, harvesters, and irrigation systems all require diesel or electricity. When energy is expensive, the very act of growing food becomes a financial burden. But the connection goes deeper. Natural gas and petroleum are key components in the production of nitrogen-based fertilizers. When energy prices skyrocket, fertilizer plants may slow production or shut down entirely, leading to a global shortage and lower crop yields. Farmers are forced to pay more for less, which ultimately results in higher prices at the grocery store for staples like bread and dairy. In the aisles of a supermarket, the crisis becomes tangible. Every item in your basket carries the hidden cost of the blocked strait. The price of bread rises because of the fuel for the tractor, the cost of fertilizer, and the diesel for the delivery truck. Meat and dairy follow suit, as the cost of grain used for animal feed increases. This is the definition of a global cost of living crisis. What started as a local blockade in the Middle East has now become a global wave of inflation, affecting families thousands of miles away. Nations that depend heavily on energy imports are hit the hardest. Their economies slow down as consumers have less money to spend. Central banks may respond by raising interest rates to combat inflation, further slowing the global economic engine in an attempt to stabilize prices. This interconnectivity is the hallmark of our modern age. No country is an island when it comes to the supply chain of energy. The Strait of Hormuz is more than a geographic location. It is a pulse point for the world's economic health and stability. When this pulse is interrupted, the shock is felt everywhere. It serves as a stark reminder of our dependence on fossil fuels. Understanding these links is the first step in preparing for a more resilient future, where energy security is not tied to a single choke point. In summary, oil is the foundation of the modern supply chain. A disruption in one place is a disruption for everyone. As we look forward, The fragility of this system remains a central challenge for economists, politicians, and consumers alike. Stay informed about the world around you, because a narrow passage on the other side of the planet affects the price of the bread on your table. Thank you for watching. Understanding global economics starts with seeing the big picture. Stay curious and stay informed.